The following is a presentation of TFNN. Live at TFNN, the Small Cap Roundup, with your host, Kate Stalter. Now, Kate Stalter.
Oh, back here again. I was away last Thursday. Nice to be back here, rounding up the small caps with you. As I mentioned, I was at the Traders Expo in Dallas. Got a chance to hang out for a short time with Tom O'Brien. That was terrific to see him. A lot of fun. Lots and lots of trading systems and software at the show. Unfortunately, fortunately, I was doing some terrific interviews with a lot of traders. Met some great people, very interesting. But there are a lot of trading systems and software, a lot of presentations. I did not get to see any of the presentations because I was just so busy doing the interviews and working with that. I did get to hang out a bit also with a hedge fund manager named Ed Hornstein. We've had him as a guest on the show. I met up with his team, and we all got together for dinner on Thursday night. So these events are a great chance to meet up with folks that you talk to a lot, exchange emails with a lot, and it's just a great chance to be seeing everybody. So, one of the big takeaways I had from the show, though, find a method that works, that you're comfortable with. I interviewed a lot of people. Like I said, it's interesting because some will say, never, ever, ever, under any circumstances, do you adapt any aspects of your trading method. Others are equally adamant that you need to make subtle or maybe not so subtle adaptations depending on market conditions, changes that occur over time in other aspects. Now, I personally see the latter as a little more realistic. I know people who claim to be purists of certain investing systems, but I think when people, and I've seen this myself, when people get all worked up about being purists of a certain method, they don't understand that even the people who invented the systems are not purists in the same sense that some of the followers may be. It just doesn't always work. The best traders I've seen, and just anecdotally, are absolutely adaptable. They use a set of trading principles or guidelines to determine their watch lists and their buy and sell points. And it just seems to be, some of it you may call Monday morning quarterbacking after the fact, but I do think that, an ability to adapt to certain conditions and continue to use your trading principles, that just seems where people do enjoy the most success. I mean, I'll tell you the truth. I've seen over the years a lot of people who, when a trade is working, they insist that it's breaking some kind of rule, and they'll kind of harp about that. But nonetheless, the trade is working. So it's kind of hard to argue with that, but people like to say how it's validating the rules. I think that's just a little bit of some maybe misunderstanding of what trading rules really are. In any case, okay, that was just something I was thinking about after the show. Just kind of a couple of those different camps that I was talking to. Wanted to take a look today at, I started out there, I put up, because we are the Small Cap Roundup, also focusing on low price stocks priced between $5 and $12 a share. No penny stocks. I was explaining to somebody at the show. that I don't trade penny stocks, just way too risky. Somebody kind of almost balked when I was telling them about what I was doing. They said, "Oh, I don't trade small caps," and I was like, "Well, okay, a lot of people don't. I understand that. A lot of people do prefer the more liquid names." But then I think they realized I was not talking about penny stocks. I'm talking about stocks with a market cap. I prefer that area between 300 million and 2 billion. I know a lot of the indexes, they will look at 3 billion as their ceiling on what they consider to be a small cap. And certainly, when I do enter a stock, if the market cap rises above the 2 billion level, I'm not going to sell it for that reason. I know there are a few funds that, because of their mandates, they are not able to hold a stock once it gets to a certain market cap or above a certain price target. But hey, I don't have to do that. So we can pick these and let the winners run. Perfectly fine. That's also why why that price range of $5 to $12 is also so significant, because you can make a purchase in that range and then see it rise significantly. That can often be very, very fertile ground as a springboard for further gains. So I've got a chart of the IWM up there, just taking a look. Little bounce today near that 200-day line. Nothing to get too excited about there right now. The market is still in a downtrend. We were able to, in our newsletter last week, we were able to capture some gains on the downside, so that was nice. There are quite a few instruments enabling us to do that. We were able to do that. So that was that could be something we'll go back to if the market does remain in a downtrend, but obviously, we're just kind of in this no man's land right now. Back to this volatility. Obviously, everybody's going to be fixated on these Greek elections coming up at the end of the week. We've got just a busy time for European news that could continue to whipsaw everybody. So really, I'm kind of in the neutral zone right now of just saying, no longs. We're not making any new buys. I did sell some positions. Let's see, I believe a couple weeks ago, just because longs were not acting right. And then you did have a few days of some gains, like you're seeing right here. Let's see, I'll show you there on the chart of the IWM I have up there if you're watching on Tiger TV. So you had a couple of days of bounces here, but honestly, when you're looking at where this is relative to prior highs, nothing to get too excited about here, people. Nothing to see. Move on. And you're seeing a little bit of a bounce today. It is true that the smaller caps can be some of the ones leading the way when you do see a new bull rally emerge, and we will have one at some point. Every bull market cycle is followed by a downtrend, and then that's followed once again by a new uptrend. So it will reemerge, whether it's predicated upon optimism about what's going on in the world, or whether it just seems to happen even among the onslaught of bad news. Can't worry about that. That's something we talk about a lot on the show, and have guests that talk about this too, is just watch the trend. I think sometimes, you get into trying to predict what is going to happen in the news and how the markets are going to react to that, and sometimes it really is counterintuitive. So better just to watch the price action as your main indicator, followed by volume. Moving averages can be another good indicator. All of these I'm using. So right now we've got a little bounce in the IWM today. Let's just, for fun, why don't we take a look at the RWM, the inverse ETF of the Russell 2000. Same thing here. There were, let me see, I'm indicating back here a few days ago, maybe the week before last, there were some pretty decent gains. Now, don't forget that this is these inverse ETFs are trades. They are not buy and hold. And even, I've talked to a lot of the companies that run some of these ETFs, And they'll tell you these are not buy and hold plays. They're not designed for that. They're trades. And that's how they advise that individual investors do use these. So in any case, we are, let's see, I'm going to take a look over here. I'm noticing, we've got, I was going to talk about cores, and I noticed somebody over there in the Tiger Den. Let's see, what else we got? 2 to 10 baggers frequently with penny stocks. Yeah, that's great. I'm not going to do it, though. I know. If your homework is rigorous, you added there. Yeah, it's you can also. I've heard too many horror stories. Sometimes the liquidity in these things can just be non-existent. It's. But yeah, if you've got a method to trade them, trade them. Patience is required. Yes, I'm reading aloud from Tiger Den right now. It's just a staged reading here on the radio. Yeah, absolutely. It can work. It can work for some people. The conversation in there is pretty funny. If you're not in the Tiger Den, I do recommend that is something you check out. Okay, I'm looking at Michael Kors. KORS is the ticker. I was going to talk about this one today. The company reported earnings bolted to, let's see, some pretty decent gains. Was actually still up more than 6% intraday, but retracing some of those gains. You know, not surprising. You see these gap ups after a good earnings report, and then it's not uncommon to see the stock give up some of those gains. You know, fundamentally, this is one that does remain on my watch list, and this is kind of something that I wanted to talk about a little bit today. You know, not so much at the Traders Expo where I was last week, because everybody there, you get a lot of more shorter term, medium term, even the day traders that come in there. Not the investors. They're not the advisors. They're not the mutual fund managers. And these are the guys that we bring on the show, the mutual fund managers. You know, they will make their buy and sell decisions based on PEs. They love the PEs, cash flow per share, earnings growth. They do look at revenue growth. So they're looking at these fundamental metrics and will hold through a lot of these corrections. I mean, even though you could see a lot of selling in cores, you also know that there have been many mutual fund managers holding on to these shares based on the story. You know, you've got a celebrity designer who runs this. I think his TV show begins again this summer, the new season of Project Runway. So that's good. You've got some visibility he's not actually the CEO. He's just the namesake designer, which is probably good. I'm not sure what kind of a CEO he would really make, but as the figurehead to this whole thing, I think he's a great character. So you do have a lot of funds that are holding on through the corrections. We don't have to do that. I'm going to talk a little bit more about that. I'm going to leave the course chart up, and we'll talk a little bit more about that when we come back from this break. I'm Kate Stalter. This is the Small Cap Roundup. Stick around. Be right back after these messages.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. It's that time of year again, and the Great Panther Silver Summer Silver giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver giveaway the whole month of June at TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right, we are back with this segment here of today's Small Cap Roundup. Let me just remind you of a couple of things. I want to just go back and talk a little bit more about some of these trading and holding observations. Take a look at some stocks today, too. I've got a bunch of stocks I wanted to talk about, and we'll get to that in a few minutes here. But, okay, check out the homepage of TFNN.com for more information, not only about the Low Price Leaders newsletter. You can still get this at the introductory rate. And I got to tell you, now with the market, as I called it kind of before the break there, kind of in this no man's land right now, terrific place to be building a watch list. And that's what we're doing in that newsletter these days. As I said, if we have some more definitive action in one way or the other, I will definitely be entering some trades, and it's a great time for you to check this out right now. Just because we could see a move in either direction that we will certainly be taking advantage of. So in addition to that, what I want to tell you is there is a Tiger Dollar promotion on right now. You can get some information about that on the homepage of TFNN.com. Just with the market being the way it is, great time. I know it's easy to be impatient. It's I know that it's traders like to trade. Let's just put it that way. But I think one of the key elements to success that I've had over the years has been just knowing when to stay out, when to just chill out, when to realize that trading is probably going to be a riskier, more expensive endeavor than just sitting back, watching what's happening, and just let the markets tell you when it's time to get in either direction. It's kind of, I've heard that called the sleep at night plan, where you're not obsessing about what your investments are doing. One variation of that is to close all your trades out by the end of the day. Certainly, that's one way to go. Sort of a variation. But I'm just waiting to see what's happening. We've got some nice gains in the indexes today, but we are not in a confirmed uptrend. So just want to keep that in mind. Okay, so just coming back, I want to kind of finish up the thought there I was talking about with regard to Michael Kors. So this is a mid-cap, market cap of about $8.1 billion right now. Terrific liquidity, but this was a very high-profile IPO. Back when it made its debut last year, just in December. Feels like it's been around for longer, just because it had. Let me put this on a weekly chart for you there on Tiger TV, and there we go, refreshing the screen. So you can see it there on a weekly chart. So you can see this nice run up it had there at the end of the year. Then it's been in a correction since then, a consolidation. But it feels like it's been around a lot longer. Maybe just because it is such a high profile. This is one. What I was talking about before were the fundamentals and not using those to make any kind of decision. Terrific. We've got double-digit sales growth, which is exactly what you want to see. You've had a little bit of a slowdown in the past couple of quarters in the rate of income growth, 87% most recently, down from 200% a couple quarters ago. You know what? Nothing to be concerned about yet. That is a 87% earnings growth to 28 cents a share. And that's actually not including today. That's what I'm looking at there is not including today's growth. I've got to do the calculation on that. I haven't done that yet. But nonetheless, point being, ridiculously strong. Exactly what you're looking for. Let's see, analysts are looking at, let me flip over to my other screen here. Oh, goodness, okay. Yeah, before today, I don't think this has been updated. I'm looking at MSN. 82% growth to 69 cents a share expected in 2012. 42% to 98 cents a share seen for 2013. So all in all, pretty strong. We don't have to hold through these big corrections. A lot of times, I do run fundamental screens. I know if you listen to the show a lot, you do hear me kind of, in some sense you might say mocking, maybe, some of these fundamental predictions. But I do use them as screening mechanisms. Both the estimates and the track record, just to see, is this something that the institutions have confidence in at this point in time? And it's a good indicator of that, and a good way to keep watching a stock as it emerges from a consolidation. All right, I'm going to look at a bunch more stocks coming up after the break. I'm Kate Stalter. This is the Small Cap Roundup.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
All right, we are back with this segment of today's Small Cap Roundup. I want to come back in a minute and talk about a couple more fairly recent IPOs, but I see that we have Garo from Orange County wants to talk about the Market Vectors Gold Miners ETF, the GDX. Hi, Garo. How are you today?
Good. Thank you, Kate. How about you?
Oh, doing great. Like I said, I'm enjoying these this market right now. Just kind of watching it because I personally, the way I trade, I've got no pressure to trade at this particular time. Just let this scenario play out, and it'll make a move in one direction or the other. And even if it's short-lived, we can grab some profits off of a short-lived move, even if it's just a tradable rally.
Absolutely, that's what I do. Absolutely.
That's right.
Yes.
So you were looking at the GDX today. What are you looking at in this one? I've got the chart up there on Tiger TV.
Yes, ma'am. I bought GDX 3 days ago, right on 50-day moving average, or on 45.40. I have 1,000 shares of it, and
nice.
Now is moving there at 46.80, 46.90, and so on.
Right.
It's slightly above its 5-day simple moving average.
Mm-hmm.
What's your take on it? Do you think should I hold it? Should I sell it? or this is good for long term, or this is good for short term like I have?
I'll tell you how I would trade this myself. If I were in this one right now, what I would do would be to put in like a trailing stop. So that way you never lose all your gains. You see what I mean? So in other words, it's always going to be a winning trade. Because at this point, who the heck knows what is going to go on with the commodities, the gold miners, I don't make predictions. And you just don't know how this is going to move relative to what might be happening with the equity markets in the next few days, just based on what's going on in Europe, if people get more freaked out again. So that's what I would do. I would just with some of these ETFs, and I agree with you. They can be profitable trades. But right now, we just don't know if we're in an environment where we could take off into some kind of sustained uptrend anytime soon. So a trailing stop would really take care of that for you, and then you wouldn't lose any. You would not turn a winning trade into a losing trade. In other words, does that sort of approach make sense?
Absolutely, yes, ma'am. Yes, ma'am.
Yeah.
In these days, you have to be very cautious, very, very careful. But yes, I can do that. I can either put a sell order for half of it at $47, which we have only about 8-9 cents to go. I can sell 500 shares and then keep the other 500. See how it goes.
Yeah, and then just on the shares that you do keep, just keep upping the stop on that one, so that if it falls, you're not gonna it won't turn into a loser. Because don't you hate that? I mean, I think that's one of those mistakes that people make. When you have a winner and then you just kind of let it ride, and you don't put in the trailing stop, and it turns into a losing trade. So hate that.
That is true.
You don't want that. Yeah. Well, Garo, thanks for calling in. Great to hear from you today. Call in next time.
Thank you, ma'am. Absolutely. Thank you so much.
All right. Bye-bye. All right. Have a great day. Bye-bye.
You too, ma'am. Bye-bye.
Yeah, a lot of these, these ETFs are very interesting trading vehicles. Right now in this particular environment, like I said before the break, and like I was saying to Garo there, these are trades. These are not long-term holds. And like I said, it's interesting that even the companies that run these will tell you that, and I just think that's fascinating. I'm not sure a lot of people are necessarily aware of that many of these they don't view as something that they recommend that individual investors go into as some kind of long-term hold. Okay. So in any case, let's see here. I want to put up another recent IPO here that is in the news today, and this one is Fusion.io. Let's see if I can say it right. Fusion.io, and this is providing corporate memory for Facebook. Is one of their biggest corporate clients, and you can imagine just huge memory storage that's needed there. Now, this has one of those very interesting corporate pedigrees in that Steve Wozniak is one of the founding members of the team. He is not the CEO. I believe they call him the Chief Science Officer. Now, let me put this on a weekly chart up here for you. Okay. So obviously, you can see that despite a whole lot of hoopla about this one, because of its pedigree, because it has Facebook as a client, because of the Wozniak connection, did have a pretty nice run-up back there in the fourth quarter, but really 2012 has not been kind to this stock at all. And let's see here. I'm going to put it back on a daily because I know they did announce a deal with Cisco. So, yeah, seeing a little bit of a bounce today because of a deal with Cisco, but really nothing to get me interested at this point. And again, this potentially could day traders who are prepared to be tracking some of these movements on a more regular basis take advantage of a trade like this? Oh, absolutely. Absolutely. But I'm really more of a shorter, medium-term trader, and heck, some of them could even turn into longer-term buys if they do continue to work. So this is, given that this is not one that interests me right now. It is a small cap. It is right now. Did not used to be. It's got a market cap of about $1.7 billion. And again, a tremendous amount of institutional interest in this one just because of the story. Moves more than 3 million shares a day. So just more liquidity than you might see in a lot of these newer companies with a market cap of $1.7 billion. Went public in about a year ago, June 2011. Yeah, almost exactly a year ago. And, you know, I do like IPOs. Doesn't mean that this is one to be permanently written off. And heck, I wouldn't even say that about Facebook. Could turn in, despite all the naysaying about that particular stock. I think people are enjoying seeing what's been happening over there in some kind of twisted way, because you get a lot of these, you know, the big players maybe not enjoying the kind of success they thought they would. I don't feel that way. I'm indifferent to the whole thing. There was a quote, as many of you know. I was with Investors Business Daily for about a decade. I did lead a lot of the seminars, the workshops, got to talk to a lot of individual investors out there. And one of the quotes that I loved, it's from Bill O'Neill's book, How to Make Money in Stocks. I'm paraphrasing. I don't have it in front of me. It's something to the effect of, all stocks are bad unless they're going up. Now, of course, that's he is obviously, as many of you know, more of a long investor rather than a short trader. Though he did co-author the book with Gil Morales on shorting. However, Bill is really, his methodology is really more to the long side. So that's where that quote comes from, is all stocks are bad unless they're going up. So yeah, I'm gonna have to apply that quote to this Fusion IO chart. And let's move on, shall we? I think this is another one that, despite the connection with Facebook and Steve Wozniak, not a whole lot to see there. So let's take a look at Triple D. No, not Guy Fieri, not diners, drive-ins, and dives, but 3D Systems, DDD. Now, I've talked about this one before, I think a while back when I was guesting on Tom's show, and I believe Steve was hosting that day, and we were talking about the printers. This is a company that makes 3D printing systems for not only industrial applications, I think they've also unveiled some consumer products. It sounds like this is just one of those new technologies where you see that there's plenty of room for growth. I'm liking this one. I'm actually going to be writing about this one for an article for moneyshow.com that'll run tomorrow. I believe I'm going to include this one. And this is one I've been tracking quite a bit recently. It is one of the watch list stocks that I do have. Now, this one is trading near new highs. It's actually just pulled back from a new high that it reached last week, getting nice support above its 15-day moving average. What I've actually done on some of my charts recently, I've put up some shorter-term moving averages. I like the 10-day, but I've actually I'll also go to a 5-day exponential, 15-day exponential, and that's what I'm looking at right now. I'm seeing that this did get support right at its 15-day exponential moving average on Friday, and has actually managed to post some price gains when other stocks in the market are not able to do that. So it's trading above both its 5-day exponential, 15-day exponential. This one looks good. And, if we were in better market conditions at this juncture, I would consider this in the buy zone right now. Definitely would. Now let me talk to you a little bit about some of the particulars. Another small cap, market cap of about 1.6 billion. Good liquidity on this one too. Moves about 1 million shares a day. Now this is not a recent IPO. This has been around for a while. It went public back in the late 80s. Believe it or not. And this has been growing through some acquisition lately. Let's see. In May, I remember writing about this not long ago. It acquired a company that does print technology and designs for medical prosthetics. And that's just an area where R&D has just been growing in leaps and bounds lately. So this is this is a really interesting one that I like, that I've been tracking. I want to just give you a flavor of some of these names that I like. So in other words, I think you're getting the picture here. What I'm going to be tracking in the Low Price Leaders newsletter, which also, by the way, does include these small caps. This is not what I would consider a low price stock at all, trading about $32.41 right now. I'm pretty much price agnostic, actually, when it comes to these smaller caps. Now, this is at about $32.41 right now. I like the technical strength. Now, one thing, if there's anything to be desired here, but this is really not so bad. In a better market condition, you would prefer to see heavier volume to the upside. Let me just, I've got that on a weekly chart up there on Tiger TV. Let me put that up on a daily chart for you. So really, the daily volume recently, I think we had back here in late May, we had a couple days of a couple heavier volume spikes, so that's good. Basically, as it's been kind of consolidating, meandering along, you did have that pullback from a high that occurred on Thursday, 6-7. Now, here's what was interesting about that. Volume was quite low that day. It was below average and also below the previous session, and you've had some lower volume in these sessions subsequent to that. So that's okay. As it's sort of consolidating here below that high, it's actually quite normal and desirable, really, to see lower volume. You wouldn't want to see a whole lot of churning happening on heavier than normal volume. So that's 3D Systems. Wanted to show you that. Let me jump to a couple others here that I'm taking a look at. Some of these names that are near new highs. Let me just put up a chart here, and I think maybe I've talked about this one in the past. Ametech, AME, is the ticker on this one. And in case you haven't noticed, one of the things that you'll get a lot on these screens I run, and you'll find this in the newsletter too, are stocks that you may not necessarily have heard about. I mean, there are some household names that I do track. Well, we talked about Michael Kors, but that's a mid-cap. Buffalo Wild Wings is a pretty well-known name. That's a small cap. I'm going to come back and talk a little bit about Ametech, AME, after we come back from the break right here. We've got one more segment in today's Small Cap Roundup, and we'll take a look at maybe some stocks that you don't hear about so often. I'm Kate Stalter. Stick around. After the break, we'll be right back.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back. This is the Small Cap Roundup. I'm Kate Stalter. Just want to remind everybody one more time, if this is our last segment today, check out the homepage, TFNN.com. We've got the Tiger Dollars promotion that's going on right now, and you can also get in on the introductory rates for the Low Price Leaders newsletter. And really, I'm just kind of giving you a sense today for how I go about analyzing these stocks, how I make these trades. I do use some channels, some moving averages. I'll use fundamentals frequently as a screening mechanism, not as a way of making buy and sell decisions. Earnings can also be that's a place I'm also very attentive about when it comes to just knowing where they are, because that can have a big effect on the stock to either the upside or a downside. A lot of times I will pare back a position, even I'll only for the most part be holding a winning position. I don't let these stocks fall too far below their buy point. With some of these lower price, more volatile, smaller stocks, you need to give them a little bit of room, maybe 10% or so, which is a little more than you might give a more liquid name, to fall below the buy point before I will cut the losses. But in any case, if I do have a winning position and we're coming to an earnings report, I might pare back that position, sometimes even take some profits, because, we see how the market these days will punish a company if there's something in the report they don't like, margins perhaps being squeezed a little bit more than the fundamental analysts like to see. So make no mistake about it, these fundamentals do make a difference in terms of how the stock can trade. And even if you do miss out on an upside move, there are gap-up situations where you can easily jump back in. Also, there are many of these gap-up situations, you'll see the stock consolidate again after that, offering you a brand new buy point on this one. I'm not obsessive about trying to capture the absolute high or the absolute low. It's really just about getting in on the trend, and that's where a lot of these moving averages and to a lesser extent channels will play a role in how I'm trading some of these names. So I left up the chart there for Ametek, AME. This is actually a mid-cap. But the mid-cap area can also provide a lot of fertile ground for some good trading and perhaps even investing opportunities. And I'll trade them the same way, frankly. There's really not going to be any difference for the most part. I did just mention a moment ago that on some of the smaller names, I might let them run a bit longer as they slide beneath a buy point, just because some of the smaller and particularly stocks priced single digits, say between $5 and $10 in that range, might actually be a little bit more volatile and need a little more room before you're trading in and out of these things quite so much. So right now, Ametek is one. It's pulling back from a high that it reached yesterday. So this actually did clear a consolidation, but obviously I think the action yesterday shows you why this particular environment, where there still remains so much indecision and uncertainty about what's going on in the market, this is just a particularly risky environment in which to be making new buys. And you can really say that about any market downturn, because already traders have shown that they are inclined to be selling at this juncture. Okay, so that's our show today. Went by in a heartbeat, just like it always does. I will be back here again on Tuesday. Thanks for listening, and check out TFNN.com. Low price leaders. Have a great day.